You are listening to ChartingWealth.com for Thursday, September the 1st, 2016. Thanks so much for joining us. We always start off with IYY, which is the iShares Dow Jones U.S. Total Market Index Fund. And it's an ETF, an exchange-traded fund that tracks the whole market that is going down. Down another day, 0.19%. We crossed over going down back on the 24th. Well, no, I'm sorry, actually the 22nd of August, and we have seen some powerful down movements. Our derivative oscillator rotated over going down on the 26th and has continued to accelerate downward, as has the MACD and the signal line. They've both been moving down and apart, that is diverging. So we have strong down moves on our big chart. Our weekly chart has not yet crossed over. We'll see more of that when we go to the S&P 500 and the Qs. What do we have going on as far as throughout the day on Wednesday, the last day of August the 31st? We saw down movement in the morning and the afternoon. We've been in a confirmed down move on the total market since the 24th when the market rotated over going down. Now let's go immediately to the S&P 500 on the two-day chart. It was down 0.28% for the day. It crossed over going down also back on the 22nd. And we see that we have two big down candles, one on the 26th and another one on the 31st. And again, this is just the first day of that new two-day candle forming. Again, the market is in a confirmed down move. We've tried to draw out a decent trend line. And yeah, we can get a pretty decent trend line cutting through, well, almost three candles, but we do have a decent trend line. And of course, that trend line has bisected. And whenever we see this happen, where we've got an up moving trend line on our weekly chart, and we have depicted that in yellow on our chart, and then another line, this is the two-day trend line in blue on our charts, that crosses it, bisects it, cuts through it. That typically means that that weekly move has weakened significantly, if not ended. Although the weekly chart is still in a confirmed up move, the strong down moves we've seen on our two-day charts are definitely affecting the ability for that to continue. And if we look at what happened during the day, and again, remember, we moved over going down on the two-day chart back on the 22nd. If we look at the 4-hour chart, we can see that it moved over, actually bounced off the signal line back on the morning of the 24th, and that was your entry point. That was a great point to jump into the market somewhere around an opening of 118.97. Down to a low of 118.29. We are now, of course, closed the day at 117.39. So again, a good dollar appreciation in just a few days on that down move. Now you may be saying, wait a minute, how do you make money when the market goes down? You need to listen to our inverse funds, how to make money when markets crash. That can be found at our website, can also be found at our Charting Wealth YouTube channel. Our website's chartingwealth.com. What do you do when the market is going down? Well, you get into an inverse fund like SH or QID. That is the inverse of the Qs, or the NASDAQ 100. That's how you make money when the market goes down. It's a short-term play where you go and you buy that ETF. And again, everything we talk about here is about doing virtual trades. We're not a stock calling service. We do not give you investment advice. We're an education firm. We want you to learn how to read these charts, figure out what's going on, make smart moves, and once you get it down and can read a chart, develop your own trading stratagems, then and only then, when you make the decision, do you actually start using real money. We are not a stock calling service. Now, so we see the market has continued down, still below the two-day trend line, and of course well below the weekly trend line, which has been bisected. Now, that is where we are. We're continuing to watch this down play, and again, as the down play continues, those of you who are in it are doing well with it. Now, lastly, as far as our indexes go, we're going to go over to the Qs, which is the NASDAQ 100. What do we see going on there? Well, it too crossed over going down and bisected the weekly trend line with the two-day trend line. We have a nice trend line connecting three candles. The derivative oscillator heated up. The MACD continued to diverge from the signal line after it crossed over on the 26th. And if we look at the 4-hour chart, what do you see going on? Well, the 4-hour chart shows continued down movement. And again, for those of you who look for alternate ways instead of just waiting for a backup on the MACD, that is the MACD to cross back over and back up, that means move in the opposite direction of the big move. We talk about how you can use up moves for the backup as far as the Heikin Ashi candlesticks. You can also look for a great signal when you have a crossover going down of the 2-day trend line through your weekly trend line. After that up move, which would cause that, you can then jump in. And so the jumping in point for those of you who didn't look for the double crossing is on the morning of the 30th. And again, we've continued to see nice, smooth down moves after a bit of a backup on 2 candlesticks, 2 4-hour candlesticks on the 29th, the one bump up day. So we're in a confirmed down move on both the Qs on the daily chart and on the 4-hour chart. Now lastly, we're going to go back to our 2-day chart and take a look at gold. Gold was down 0.20%. Again, doesn't gold usually move opposite what the stocks do? If the stocks are down, gold is up. Yes, but we live in a crazy world. Gold is still moving down. Those of you who paid attention to George Soros know that he sold a lot of his gold holdings recently. He also shorted the S&P 500. Interesting. Both of these are moving down at this point. Isn't that fascinating? We have 3 2-day candlesticks connected. Again, just the first day on this candlestick on the 30th, but strong down movement in gold after gold crossed over going down back on the 8th of August. And if we look at our 4-hour chart, what do we see? Still below the 2-day trend line. And of course, we had the crossover going down on gold back on the 19th in the afternoon. Those of you who jumped in have been well served in an inverse fund by the down movement in gold. Folks, that's where we ended the markets on Wednesday, the last day of the month of August, as we jump into the month of September. We so appreciate you being with us. You have questions, problems, concerns, let us hear from you at Charting Wealth. I do want you to know that our daily stock reviews are going to be a bit sporadic. I am actually taking my first vacation in about 7 years, my first lengthy vacation. I'm going to be going to Europe tomorrow, boarding a plane to Holland in the afternoon. So I will try to get a review out before I get on the plane in Philadelphia tomorrow. Hopefully, I will be able to get you the Friday review out. If I cannot, I cannot. But I'm going to try to find a place in the airport to do that. Then I will do as best as I can with limited internet access and such to provide you with continued reviews on my 2-week cruise as I cruise throughout Europe, visiting various capitals and places. So I appreciate your patience. Please bear with us. If you appreciate what we do, go to Charting Wealth, sign up and be what we need you to do is to go to our channel at YouTube and support us there. Go ahead and sign up. Also, if you would not mind subscribing, of course, there and at iTunes, we'd also appreciate a 5-star rating. Those kind of things are always helpful to us with our metrics, and we'll continue to do all that we can for you. Thank you so much. God bless. Hope that the markets are treating you well and you're learning how to read these stock charts. It is your roadmap to riches. God bless.